This is Alan Farley from FX Empire. Dow Component American Express is trading higher on Thursday morning after a Bank of America upgrade. Taking a look back, the stock posted marginal high in 2007 and broke out once again in 2013, coming up to the 90s. Now it came back up to that level once again in 2017 and took off in a very strong impulse that got up near the 140 level at the start of 2020. The stock fell to a 3-year low during the pandemic decline and turned around in this sort of a two-legged advance, coming back to the prior high in February 21. Now, it's been a very strong breakout. As you can see, that breakout above that 137, 140 level got all the way up to about 180 in July. Well, that's about the time that the Delta variant really started to take hold in the United States, and corporations were forced to delay their business travel plans probably into next year. As we can see, we've got this pullback developing, and if you take a look down here, and this is a monthly chart, you can see that the monthly stochastic has dropped into a sell cycle that predicts many more weeks of downside. Now, if you in the past, you could see that when American Express got up to this overbought level, it actually could still post some fairly decent gains. It did it here in between 2011 2015, and once again between 2017 and 2019 2020. However, now look at the 50-month moving average and see how far the stock has come above this moving average at the time it posts this high. We have this little space right here. We have this little space right here. We have this space right here. Now take a look at this one. We have this enormous space back down to the 50-month moving average because of this very vertical assault. Now this is very unstable because it produces a lot of downside energy, and so especially with this sort of stretching and ongoing sell cycle, I think we could very easily get down to the 140 to 150 level. Now the 200-day moving average is right around 150, so that's support, but there's really not that much stopping the stock from coming down, maybe to about the 135, 140 level, testing this breakout, which is also the 382 retracement of the assault up to 180. So I would be real cautious here, especially in the fourth quarter, especially with business travel and leisure travel unlikely to pick up steam until the start of 2022. So this is kind of a tough stock to buy here. You may be better off waiting for a lower risk buying opportunity.